Okay, meet Elon Musk. He made tweets like this and raised Dogecoin prices like this. It's going viral and everybody posted their profit. And I still remember, I just graduated from college students. I had a very low salary, but because I was fear of missing out, I joined the rally anyway. So I invested 50% of my assets, and guess what? I lost. From that, I learned something. I read many articles and I get a better job now, and I watch many videos on how to invest as a beginners and etc. So from that learning process, I know that if you want to start investment with a low salary, you need to screening your financial condition. You need to know what are the stages you are currently in, so you can prioritize what's more important first. Okay, so this video we're gonna discuss two things. First, what is investment and what is the parameter of low salary? And the second, when is the ideal time to invest? What is the parameter of low salary? Well, the parameter is quite subjective. Basically, low salary means that you are getting paid less than the minimum wage of your country or your region. It depends on what country you are currently in. Probably $500 a month in my country is above average, but certainly in US, it's not enough, right? What is investment? So basically, investment is an asset that allow your money to grow. Take example like when you buy goods as an investment, your intention is not to consume the goods, but you use it in the future to create wealth. Take example, you buy gold in today's price, you keep them, you expect the higher prices in the future, you sell it and you get a profit. So that's basically investment. What are the types of investment? There are so many types. Take example like stocks, deposits, mutual funds, bonds, even saving for education is also investment. Before you decide what type of investment you want to choose and how much money you want to invest, you need to know when is the ideal time to invest. So guys, actually the answer is very simple. If you make little money and you're still struggling to survive, you have a debt to cover your daily necessities, means that it's not the right time for you to invest or to buy other assets. What? Why? Are we supposed to invest as early as possible? The quicker we start, the bigger money will grow? Yes, I know. But you know what? Every person has different conditions and priorities, right? If you have a low salary, then your goal is to grow your money or to grow your income, right? Let's think about this. If you make $500 every month, and you invest it on the stock market for $50 every month, means that in a year you get a $600 in total, right? So let's assume that you get 10% of return every year. So means that $600 times 10% which means you get $60 return every year. That's pretty good money, but with that money probably it's better for you to generate your income, to use it to increase your skills. Then the question is when we can start investing. Should we wait until we're rich? No, guys. Rich and poor is very subjective, right? To answer this question, we need to know the financial stages first that you need to achieve gradually so that you have healthier financial condition. What I explain here is taken from several theoretical approaches, such as a financial pyramid and a step towards financial freedom. Okay, first stage, dependence. In this stage, your financial condition depends on other people. Take example like you are students or college students and your daily necessities depends on your parents. So in this stage, are you allowed to invest? The answer is yes, of course. But your mindset should be different. You should have a learning mindset, which means you want to learn, invest from the beginning, right? Not to invest to get rich quickly. Because sometimes as a beginners we make mistake, and mistake means you make loss on your investments. So loss and etc. sometimes is quite shocking and traumatizing for several people. So that's why if you want to invest in this stage, you need to learn more about investment first. The second stage is unstable income. So in this stage, you are not dependent on other people anymore. You have your own income, but unstable. Take example like you're an employee and your salary is below the minimum wage of your region. You cannot save your money in this stage. You still need debt to cover your daily necessities. So in this stage, what should you do? First, you should focus to make your cash flow positive. Positive cash flow means that your income is enough to cover your daily necessities or monthly expenses. So, how to make your cash flow positive? First, maintaining your lifestyle, or the other way is to increase your income. Try to get stable income first. I know this is very hard, but you can buy a course to increase your skill, so you can have a side job, and etc. So at this stage, you should allocate your money to increase your skills, knowledge, and opportunities, so you can enter immediately into the next stage, which is stable income. So third stage is stable income. In this stage, you have your own income, and it's enough to cover your monthly expenses. You don't need to have a debt to cover your daily necessities. But even if you have a debt, it should be productive debt. Take example like to grow your business. But even if you have stable income, you need to secure your finance first by having an emergency fund. Take example like health insurance and etc. And the amount of emergency funds, it depends on your monthly expenses. Sometimes it can be 3 until 6 times of your monthly expenses. Take example like you spend $1,000 every month. So your emergency funds could be $6,000. So you can start investing in this stage, but the function or the goal is to secure your emergency funds. You can start to invest in gold, deposits, or money market funds. So having an emergency funds is important for you to prepare for unexpected risks in the future. Take example like when you sick in the future, when your family is sick and etc. You can use these emergency funds. After you have emergency funds, you can start investing on the stock market, on the crypto market, and etc. Everything that you want. Because in this stage, you already have knowledge about this. You have mentally and financially more prepared. That's why if your assets prices is down, take example, you will be more secure because of you already have emergency funds, right? So the last stage is financial freedom. People who have achieved financial freedoms means they already have passive income from their business, royalties, dividends, or anything that can fulfill their daily necessities until they die. In short, they can already retire and fulfill their lifestyles or maintaining their lifestyles for the rest of their lives without working anymore. So of course, financial freedom is everyone's dream, right? And is there any other stage? In some theories, is there any other stage, namely legacy stage? This stage is filled with super rich people whose rest of their life are used to distribute their income in the form of charity or foundations, such as Bill Gates or Oprah Winfrey, J.K. Rowling, and etc. Take example like Gates Foundation. We already know this foundation. In 2019, Gates Foundation spends $5 billion to programs in the United States and around the world. So this is one of the examples. So okay, that's all discussion from me. I hope this content can add your insight on your financial condition, especially in understanding your financial priorities. So this video is not meant to lowering your intention to learn about how to invest. In fact, you can invest at any stage that you want. But of course, you need to know that there is a risk behind that. So thank you so much for watching and see you on the next video.